In this video, we're going to continue with some inventory terms. Again, at the beginning, we talked about the flow of the inventory cycle. You purchase items to be sold, they go to the balance sheet, and then when you buy those items, you sell them, and then they go to cost of goods sold. Inventory is on the balance sheet, cost of goods sold is on the income statement. There are two types of inventory system, perpetual and periodic. We're going to spend our time on the perpetual. And then also when you are dealing with sales, there's discounts, right? Where you get a discount for paying within a certain time period. You don't have to have a discount, but oftentimes when there's a sale on credit, there's a discount. There's a returns when you buy something and they return it, and there's allowances when you buy something and something is wrong with it, and then you don't, instead of giving it back, you get a reduced price. And now we have shipping terms. So shipping terms are when which happens often, right? When one person buys something from another person, the items need to be shipped from point A to point B. And many of you have used Amazon or Walmart or bought something online. So if you buy something online, let's say I wanted to buy a pair of sneakers, which I actually did. I ordered a pair of sneakers the other day. So when those sneakers, so let's say I bought those sneakers from Amazon. And while Amazon is shipping the sneakers to me, something happened to the truck caught on fire, and my shoes were burned. If I were to ask you, if Amazon then sent me an email saying, hey, sorry, the shoes were burned, can you go buy another pair of shoes? What would you think? Most of you would say, wait a minute, that's ridiculous. If Amazon is transporting the shoes to you and the shoes got burned, that's not my fault, that's Amazon's fault. So I shouldn't have to pay for another pair of shoes. Amazon should have to pay for another pair of shoes, right? Also, if I went to the shoe store and picked up a pair of shoes and was driving home with the pairs of shoes in the back of my trunk, and for some reason I forgot my trunk to close my trunk and the shoes fell out of the trunk onto the highway, and then when I got home I realized the shoes were gone. If I go back to the store and say, hey, I didn't close my trunk, so the shoes fell out on the highway, can I get a new pair? Most of you would say, if you were the store manager, no, you cannot get a new pair because that's not my fault. You should have closed your trunk, right? So we have this innate understanding of who should be responsible when things are being shipped. And in accounting and in business terms, we actually have definitions for that. There's two terms. One is FOB shipping point and one is FOB destination. And basically it tells you who pays the shipping cost, and then it also tells you who is responsible if something happens to the items while it's being shipped. So FOB shipping point, the buyer pays the shipping cost, or the buyer incurs the shipping cost or the risk for shipping. So that means, right, I go to the store, I pick up the stuff, and then when the stuff is being shipped, I am responsible for those items, right? So the store is no longer responsible. So the buyer pays the shipping cost, and if something happens to the shipping costs to the item while it's being shipped, the buyer is responsible. And then we have FOB destination. And FOB destination, the seller pays the shipping cost. And so you see here, buyer owns the goods, seller owns the goods. So since the seller pays the shipping cost in FOB destination, I don't own the goods until I actually receive the goods. And that's the example with Amazon. The reason why I was not responsible, if Amazon is transporting those goods to me and something happened to the goods, I'm not responsible because I don't own them yet. I never took possession of them. But once Amazon has delivered those goods to me, I now own the goods. And once I own the goods, if something happens to them, then that's on me, right? So an FOB destination, the seller owns the goods while the goods are in transit, and the buyer doesn't take ownership of the goods until the buyer actually receives the goods. In FOB shipping point, the buyer owns the goods while in transit. The ownership transferred at the point of shipment, right? So either the buyer picks up the goods themselves or the buyer contracts with somebody else to pick up those goods, right? And so FOB shipping point, you need to remember the buyer pays the shipping cost. FOB destination, the seller pays the shipping cost. And for FOB shipping point, we call that freight in. For FOB destination, we call that freight out. And that's very important. So freight in, when the buyer pays the shipping cost, the accounting rules are clear. That is counted as inventory. And so let me go back to up here, right? When you buy something for reselling, right, that goes on the balance sheet as inventory. So the accounting rules are clear. The accounting rule says, look, if Barnes & Noble buys a book for $100, so they buy a book that's $100, and Barnes & Noble pays shipping costs to get that book from the publisher to the store, that really is a cost, an inventory cost, because they can't sell the book unless they have the book, right? So the true cost of the book is not $100. The true cost is the $100 plus the shipping cost to get the book there. So the total cost for the book is $110. $100 for the book, $10 for shipping costs. So every time you have freight in or a buyer paying shipping costs, you actually can record that as inventory, right? So you debit inventory and you credit cash, and we'll see that in a second. FOB destination is different. FOB destination, this cannot be counted as inventory. It's a delivery expense. The accounting rule says if I'm a seller and I say to you, hey, I want you to buy this book and I'm going to give you free delivery, well, that is not a that is not something that I have to do. I am doing that to entice you to buy the book. So since it's not something that I have to do to sell the book, it's a delivery expense and it does not count as inventory. So when you have FOB shipping point, when a buyer, somebody who is reselling goods, if I buy something that I'm going to resell, and if I pay shipping costs to get that item from the warehouse to my store, that is considered freight in and I can include it as inventory. If I'm a seller and I offer to pay the selling charges, the shipping charges, that is freight out and that is a delivery expense. So freight in is always included as part of inventory and means the buyer pays for the goods, and FOB destination, freight out, the seller pays for the goods, and it is never included as part of inventory. So please remember that.